The Nairobi Securities Exchange has welcomed its first exchange-traded fund to track the price of gold in the international markets. At the time of listing, the ETF was valued at $1.4 billion, making it the largest gold ETF in Africa and 7th largest in the world. Take a look.
Kenya has launched the first gold-based exchange-traded fund in East Africa. The Barclays New Gold ETF, which is listed on the Nairobi Securities Exchange on Monday, will track the real-time price of gold in the international markets.
Kenya, and in particular, the Nairobi Securities Exchange marks a significant milestone in the history of the exchange when we list the Barclays New Gold ETF, Kenya's, and indeed the region's first exchange-traded funds product. The New Gold is an exchange-traded fund listed primarily on the Johannesburg Stock Exchange, and on a secondary basis, the Nairobi Stock Exchange from today, which enables investors to invest in a debt instrument, the value of which tracks the price of gold bullion. And ETFs are based on the real time value of the underlying asset that they track.
Valued at $1.4 billion, the investment vehicle becomes the 7th largest gold ETF in the world.
With this listing, Kenya becomes the 7th market within the Barclays Africa group to launch this new proposition, which is valued at approximately US dollars 1.4 billion, and is the largest gold ETF in Africa and the 7th largest in the world. I'm informed that 400,000 units valued at nearly $500 million shillings will be made available to this market at the time of the listing.
By launching the Barclays New Gold ETF, we join the good company of Botswana, Nigeria, Mauritius, Namibia, and Ghana, and of course, South Africa, where there is a primary listing on the Johannesburg Stock Exchange. This is a good statement on the progress we have made as a country in positioning Kenya as an investment destination.
The fund will enable investors to diversify their portfolio at the Nairobi Securities Exchange while increasing the liquidity of the market.
The attractiveness of ETFs revolve around their liquidity, their modest fees, and really the tax efficiencies that come around them. They enable investors to spread their risk, diversify their portfolios, and the pricing and the liquidity around it on an intraday, on a daily basis also provides some level of attraction. We're happy to note that due to the collaborative efforts, we have been able to have good legislation to support capital market products. A case in point is the repeal of the capital gains tax. That was actually going to be a very big challenge to bring in products into this market. So it's been a very delightful journey.
And really, it takes great leadership to bring in new initiatives. And we're very honored and pleased to see what the capital markets and the NSE are doing on multiple fronts to move our markets forward, because this is going to be essential for our economy to grow and for companies to thrive. So we're very proud to be associated and working with you and playing our part on this front.
The ETF is priced in Kenyan currency at 1,200 shillings per troy ounce of gold, making the exchange rate to the US dollar a critical factor for local investors.
In terms of the actual security, one new gold security or share is equivalent to approximately 1/100th of an ounce of gold and is backed by physical gold that is held in a secure depository in London on behalf of investors. The gold is insured and cannot be lent out. Retail investors can own a minimum of 1 share, bought through the same channels as normal shares. And also, what is positive about it, it is Sharia compliant, which opens that angle as well to our Sharia investors.